101.3 Live, and today we're going to talk about Roku and the $1,000,000 secret for chasing gap and goes. Roku has had a crazy rally in the opening days of 2019, running from a low of 29 right here on January 2nd to 42 yesterday. It's set to strike 44 this morning on the open. That represents a 50% increase in 5 trading days. On that basis alone, caution is warranted with the 50% rule in play. We've had Roku in the long radar last Friday and again yesterday morning. Why? January 2nd was 90 degrees from high. Right back here, this is October 1st. So, in keeping with Gann methodology, WD Gann, a turning point was on the table. Additionally, Roku was coiled and compressed due to the tax selling characterized by the persistent downtrend in December. That decline took Roku back to the high of its first week of trading. Let's take a look at the weekly and you'll see what I mean. So this is the first week of trading all the way back here, and the December low, and the breakdown was a complete Eiffel Tower from high to low. You can see this Eiffel Tower pattern. And the undercut of this prior support that was tagged back here in the spring of 2018, the undercut of this low and this first week's high in Roku brought about by what I think was indiscriminate selling and tax due to tax consequences, saw Roku explode when that flush out level was recaptured. So it's always important, even if you're a day trader, not to just look at the daily bars, but to look at all time frames, especially the weekly swing chart when swing trading. This is how you capture big gains. So going back to the daily, why did we think Roku could explode out of this coil? Well, the all-time high on October 1st back here was 77.50. 50% of that range is 38.75. When Roku cleared 38.75 on Mondays, it exploded in tandem with an opening range breakout. We'll take a look at a 10-minute to see what I'm talking about. So here's the gap, and an opening range breakout, as I define it, occurs on a move through the first half hour's range, the first 3 10-minute bars, and that occurred right here on this bar at 38.75, and we already said that 50% of the decline, the whole leg down from October 1st, was 38.75. When Roku cleared that level on Monday, it exploded. So, the $1,000,000 secret is an opening range breakout in conjunction with clearing a 50% level is a major inflection point. Opening range breakouts off gaps are powerful continuation signals. A 50% retrace of the 77.50 high. Let me clarify one thing. The 38.75 level I'm talking about represents a 50% move off the lows, okay? However, a 50% retrace of the entire 77.50 high, go back to the dailies, of the 77.50 high to the December low down here at 26.30 gives a 51.20 gives 51.20 points. Half that range is 26.60. Added to the 26.30 low is 51.90. Remarkably, the entire range of the decline ties to a 50% retrace of the range. The range is 5120 points. A 50% retrace of the range is 5190. So if you're not using geometry in the markets, you need to. This will set up explosive moves and big gains for you. On November 8th, Roku had a large range breakaway gap to the downside right here. It opened down 8 points that day to 51. And of course, we just said that 51, 5190 ties to 50% of the range. So going in the barn door backwards, one could have assumed that this breakaway gap back here would be a midpoint and tie to the low. So this gap here defined this low. Another reason to look for a turnaround when this level was recaptured. Now, declining 20-week moving average comes in at 51 as well. Let me show you what I mean. Here's your this red line, declining 20-week moving average, and remarkably, that also comes in at 51. You think 51 is going to be important if Roku trades there? And I think it probably will, but I doubt it's going to do so in a straight line. You find the dailies here. Look back here. This breakaway gap to the upside came about on a breakout through 51, a breakaway gap through 51. So 51 shows up all over the place in Roku. Stocks can do many things. Seldom can they sit on a spike. So while Roku may strike 51, a 1 to 3 day spike on a 50% gain is almost always a place to sell, if not even take a short scalp. A pullback toward our aforesaid 3875 region that represented the opening range breakout on Monday should offer a good risk to reward long setup for that push to 51, and we'll be following up in this space. Look for more videos. Appreciate your time. Thanks for listening.